In this video, we are going to be analysing KPRX, one of the leading gappers up today, up 10%, but this has had a lot of talk about it. So, I mean, this is just a 1 minute chart, for example. I mean, we are getting heavy volume. I mean, if you look at 10 o'clock on the dot, 250,000 shares traded compared to yesterday when, I mean, the peak, or actually, there was no volume yesterday. Barely anything. So, big difference. Now, what are going to be key levels and everything we're paying attention to? So, as always, I mean, we can always have a quick look at the market profile. We can see yesterday's high and value area high. What those, I mean, would be the three levels we'd be paying attention to. But, I mean, as you can see, very far, really, from where we are now. Coming into the open, we kind of pulled back to the high and then pushed back up. So really these levels don't seem to be all that valid unless we continue down. So instead, what would be the key focus? And it would be going over to the key standard deviation channels. And we can see our closest and key resistance is going to be at $9.20. And if we break that, we have another resistance at $12.50. Now, these are quite far off from where we are now, but these are going to be the key resistance levels that we can trade off. Reason for that is, again, the 6 month and the 1 year, they tend to be the most accurate and the strongest levels to pay attention to. So if you can be patient, these are the levels that we pay attention to the upside. But we will at the end go over the shorter term time frame to give you levels closer to where we are now. But if we do break this and you are looking for even further levels, $16, $23, $27, going on to $31, $41, and $56. And onto the support side, we have a support at $2, and really that's the only one we have, because we can see this stock has been in such a harsh downtrend, going from $72 down to $5 as a 52-week low. When you see this kind of move again, it means the deviations are very downward trending, and so you can't get levels as a support. We have $2 and that is it. So really, if you're looking at the longer term time frame, it's going to be one that's going to be a bit easier to trade to the upside. So again, it doesn't mean playing a direct, doesn't mean just playing to the expectation that it will go to $9. Instead, it's staying out of the trade, waiting for it to come to $9, and if it does, again, you can look to fade the initial move that it touches it, and then if it comes back to retest it again, breaks over again, look to play it as a long. If it can come back, hold this level to support and hold, then it's a good indication that we'll push to that next level, which should be 12.30. Now, though, like we said, these levels are very far off. We will quickly go on to a shorter term time frame to provide you some levels closer, just in case you want to, well, basically just have levels that are close to where we currently are. So now, again, you can see, where did we peak today? 735. Well, we actually picked it at 750. Key psychological level, but also very close to that second deviation on the 30-day. So again, a key resistance. If we break that, we're then looking at 8.30 and 8.15 as those next key resistances. If we can break that, $9, $10, $11.50, and $13. Onto the supports and kind of where we are now. Actually, support / resistance, depending when you're watching this, but around 660. That is our first deviation on the 30-day. So again, be watching this. We pull back here, and this is where we started to more hesitate, and direction isn't as clear. This is a common pattern coming into deviation levels. So again, wait for direction to be clear. Don't really trade at these levels unless you're looking for the temporary bounce, which again, you would have got here. It did bounce, you know, near enough 2.5%, depending on what your outlook was on that. Could have been a profitable trade. If not, you may still be in the trade, depending where your stop and targets are. Now though, if we are looking at even further down supports, which, I mean, if you're looking at supports, it's probably going to be more key. What are we paying attention to? So we're looking at $5.80 to $5, $4.25, $3.40 / $3.50. So again, these are the key levels. Do you need to pay attention to all of them? No, just pay attention to where you are now. We're currently at $6.50. Your main focus then will go to $5.80 and $7.35, whatever level we touch. Again, you can look to play direction on the first one, or kind of a pullback on the first touch. So if we fall down, expect a bounce off this level. And then it doesn't mean that we are going to reverse it. It is a potential reversal at this level, but if we continue the trend, again, wait for the break, come back for that retest. And again, this can be that good opportunity to enter if you start seeing that level hold, selling pressure come in and continue its downward move. Again, these were the shorter term time frame levels. So again, these will be weaker than the ones provided before, but they're closer to where we are. So if you're trying to more actively trade this, these are levels you can look at within, you know, today and going into tomorrow. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.